Hey, welcome back, my fellow investors. It's me, ET, and remember, I'm not a financial advisor. I'm not your financial advisor. I'm just a self-taught investor who likes to talk about ways to increase one's net worth and also increase your financial literacy. Today, I want to talk about a book that really kind of got me started in my investment journey. You guys heard me refer to this book several times, but I just want to kind of give you also the backstory of this here. The book that I want to talk to you guys about that got me started was the book called The Wall Street Money Machine by Wade Cook. This book was released in 1997. That's when I read the book. And also, 1997 was a good year for books, financial books, because that's also the year that Robert Kiyosaki published and released the Rich Dad Poor Dad book. But in 1997, when this book came out, I don't know how I found out about it, but I got the book, I read the book, and I was ready to get started investing. Now, to give you some further context, 1997, I was living in Lubbock, Texas. I was active duty Air Force. I was a recruiting supervisor for Lubbock, so I took care of pretty much all of West Texas, parts of New Mexico. All right, so 1997, I'm living in Lubbock, Texas. At that particular time, my financial situation was, I wasn't struggling. I wouldn't say I was living from paycheck to paycheck. I had enough. I was living below my means. I had money coming in. I had more than enough money left over at the end of each pay period to put a little money aside in a savings account. That was it. Just a savings account. I didn't have anything invested. 1997, different period. Really couldn't afford to go to a stockbroker. At this particular time, things that Internet Web 0.2 started to take off, and he came out with this book. I read it, and I thought to myself, there's no way that you can use the stock market to generate income. Because that's what this book is about. It's about generating income. It's not really about, buying and holding the stock for capital appreciation and that type of stuff there. It's about getting in there and earning income, generating money from stocks that you can use to spend and pay bills with. So I read this book, and you know what? At that particular time, I had about $2,000 in the savings account. And that's $2,000 primarily came from a tax refund for that particular year. So I just threw it in there. About the middle of 1997 is when I finished this book, and I decided to go ahead and get started with investing. The company that I went into, started investing with, was a company called buyandhold.com. So I went in there. Now, I was in there interested as really just a way to supplement my income. So I started my investing ass backwards, as my grandmother would say. Ass backwards basically means doing something way out of order. I didn't know anything about stocks other than what I read in this book, and I didn't start investing stocks or with a buy and hold mentality or buying a stock for capital appreciation. I was buying it strictly to figure out a way to generate income. Now, within his book, realistically, the ways to generate income in this book focuses on really three things: rolling stock, buying options, and selling options. Now, rolling stocks that he talks about in this book is, I would say nowadays you would call it swing trades. You buy it at the support, sell it at the resistance. Buy it at the support, sell it at the resistance, and so forth. But back in 97, the big thing was day trading. Now, I wasn't a day trader. There have been days, doing that course that I started investing, that I would buy something and close it out within the same day, but not on a consistent basis. That was rare. That happened every now and then. But I was definitely into swing trading and buying options, not selling options. I would buy options to open up the position, and of course, you try to sell it at a higher price to close out the position. So that's pretty much what I was doing, and I was doing it at that particular time. You got to realize in 1997, the stock market really wasn't opened up and really wasn't set up for retail investors. It was getting there. Stock prices at that time were still quoted in fractions, not decimals, fractions. You'll see a price of a stock 10, 15, 16ths. That all changed, I think, back in about 2001 or so. But then it went to decimals, and now we have it. But back then it was like that. So I started doing that, swing trades, buying options. And most of the options that I were buying on a lot of .com companies. Back then, this was doing the .com boom. Oh my goodness, couldn't go wrong. AOL, oh, how much money I made off of AOL. Amazon, back then, there was just so many of those .com companies that I was actually buying options in. And it was working. You just got to remember, 97 is when I started, the latter half of 97. And realistically, I kind of stopped after the 2000 .com burst. Now, from the time that I started till then, I think my highest amount that I accumulated or I had was about a little bit over $42,000. Now, keep in mind, that initial $2,000, that was it. I did not put any more money in there. So I grew that $2,000 to $42,000. And then in 2000, when the tech .com bubble burst, I ended up with about a little bit less than about $11,000. I already said to myself at the very beginning, especially when I got up to like $42,000, I said, if things were to turn south, I'm going to at least keep $10,000. So when the crash happened and I got out of all the stocks, I had a little bit under $11,000 left. Still, I think that was a pretty good investment, from $2,000 ending up with about $11,000 over the course of 2.5 years. But it was exciting. I really got into it. I didn't know a lot about stocks. I started watching CNBC at that particular time and really just started learning more and more about stocks. But at that particular time, all I was interested in was those high growth .com companies at that particular time. And it was a great learning lesson for me. Like I said, it was as backwards because normally you need to know a little bit of something about stocks. You need to know how to do, a fundamental analysis of a stock. You need to know and start looking at things like, their balance sheet, the cash flow, and income statements. I wasn't doing any of that back then. Well, I wasn't doing any of that. The only technical analysis I knew was I know how to look at a chart and figure out a support and a resistance. I did that for my swing trades and also for buying options. But you know what? With buying options, initially when I started, it was almost like I could do no wrong. And I would always win. Every now and then have an occasional loss, but it was a great feeling. It got me hook, line, and sinker at that particular time. 2000 came around. We already know what happened in 2000. The bubble burst. I lost a lot of money. I completely got out and had a little bit under $11,000. And if I'm not mistaken, at that particular time, I put it in an index fund and I got completely out of the market. All right, completely out of the market for about a couple of years. And at that point, that's when they had introduced the Roth IRA. I started investing in the Roth IRA. I believe it started out with like $2,000 a year. So I took some of that money, moved it to a Roth IRA, and just started dabbling a little bit and continued to dabble, but nothing on a very consistent basis. And at that particular point, I was maxing out my Roth IRA. Then the Air Force came up and opened up the TSP for military. I believe it was always available to the civilians, but now they open it up to the military. And then I started investing in the TSP. It was a one of those life cycle funds. So I went from an active trader. I wouldn't say investor, because when I started, I was an investor. Went from an active trader to a passive investor, and I stayed a passive investor for quite some time, inconsistently putting money in and so forth. And now I would consider myself to be a very active investor. I'm investing. I'm doing fundamental analysis to figure out which companies to buy. I'm doing technical analysis to figure out now when to buy those companies. But one of the things that I'm doing now when it comes to options, back then I was buying options. Now I'm a seller of options. When I went through this book the very first time, they talked about selling options, and writing covered calls. But the problem was, it required a lot of capital. I didn't have a lot of capital, so I had to stay in the little leagues, so far as buying options that I could afford at that particular time. Now, yes, I can go ahead and buy stocks and do cash secure puts on stocks that I want to own, and then turn around and write covered calls on it. But it was a great book. About a year ago, it was something that was said in the book. I know it came from the book, and I wanted to look it up, and I couldn't find my book. So I went out and bought a new. Here is a replacement book that I just recently had, about a year now. And I'm going through this again, and guess what? It is still a relevant book when it comes to generating income from the stock market. They call rolling calls, all that is swing trading. But what I really got from this book, the second time reading the book, was really just kind of refining my covered call techniques. He talks a lot about that in here that I didn't pay attention to the first time because it was out of my league. Well, now that I'm doing this, it's like, oh, you know what? This information in here, even though this book is written back in 1997, is very relevant to today. So I would highly recommend those of you that know something about the market, that's looking into possible ways to generate income from the market, I would definitely say, hey, check out this book. You can go to Amazon. That's why I bought my second copy from Amazon. Go to Amazon. You can order the book. Great information. There's a lot of great books out there that talks about using the market to generate income, whether it's dividends, whether it's writing covered calls, doing spreads, and things of that nature there. So hopefully you guys got something out of this. And as always, guys, remember, save, invest, and apply what you know, because knowledge is not power. It's the application of knowledge that's true power. Hey guys, I'll see you on the next video. Take care. Bye-bye.